In this lesson, we'll look at another detail about structures. This is an extremely important concept that you need to master so that you can find your way around the context better. It should be all about structural breaks. Only when we understand when a structure is broken are we really able to recognize when the market environment is changing. And that is the most important feature for us, both for our entries and for the evaluation of our setups, whether they make sense at all. We have to recognize when a structure is broken and what that means for the market. But first of all, what is a structural break? As the name suggests, it is a level at which the current existing structure is declared invalid, which means that if we are in a trend, as is the case in this example, then a structural break is the point at which the structure is violated. This does not yet mean that we are moving into the reverse structure, but really only that this structure has now been invalidated. The structure is now invalid and thus a range could form as a result. But how do we measure a structural break? To do this, we actually only ever look at the impulse of the movement. This is always a movement that in a positive long trend moves from a low to a high, and the structure is only broken as soon as the low that was responsible for the latest high is taken out. We have already established in an early video that we use different dimensions. We have our daily H4 and M15 structure, and such a structural break can take place on any dimension. We can see it here at the 15-minute break of structure. First, the 15-minute structure breaks, then the H4 structure. The daily structure is still intact. Here in this example, we see the market first delivers us a retracement after the 4-hour break and after it breaks the daily structure. And from this point on, we are again short in all dimensions. You can already see the fractal nature of the market from this example. First, the 50-minute structure is broken, then the 4-hour structure, and only then the daily basis. So the small fractals get bigger and bigger until the overall picture is also reflected in this way. But you can also see from this that we can have situations in which we have different informations. For example, 50 minutes and 4 hour can be broken. However, a daily basis may still be long, and accordingly we know that the retracement can take place from the H4 break onwards, from which we can profit. In our example, the daily structure would still be long at this point. This means that structural breaks are essential for us to read what the intention of the major market participants are. Do they only want to reach certain levels again, but are still heading in the direction they were heading before? So still heading in the major structure? This allows us to follow the whole thing and use the breaks to our advantage. We can also recognize early on when the market environment is turning, and then be more cautious and not fall for every trap the market sets for us. In the next video, we will take a look at the structure dimensions and structure breaks in the real chart. See you later.